Assalamu Alaikum everyone, welcome back to the channel. In today's video we are going to look at Home Depot. Home Depot is one of the companies that I own in my portfolio. They've recently had their earnings report, so they've crashed it. We just need to look at it, dive in, have a look at what, if the company is still profitable. It's, if there's some sort of trouble ahead, are the company growing? So there's a lot of questions to be answered, and as a stock picker you need to know when these companies release their earnings, and obviously keep an eye on it. Anything can happen, the company can change, but obviously that one quarter is not actually gonna ruin everything, but you also still need to know if the company is heading the right directions. And this is the reason why I would definitely recommend everyone just to always look at the latest quarter results and have a look at if the company is still making profit, and if things are going the right direction, if things are going the way you want it. Okay, because remember, you're not buying a ticket, you're buying a business. Okay, the Home Depot is actually a business. They make money by selling products. So you want to know how much product they've sold, if the company, if this quarter was a good one, if it's not, what you're going to do, are you still going to hold, and whatever the case might be. Obviously, like I've always said to you, if you're a long-term investor, you need to know your company's inside out, and if you do that and you know what's going on in each quarter, then it kind of gives you reassurance when the stock goes down by 5% or whatever for no reason in one, instead of sellout. Then it gives you the reinsurance to go and buy more of that company. Does that make sense? So I hope that kind of makes sense, because that's really important. That's one of the things that that really important to me. So let's have a look at their latest report. Again, Home Depot is a home improvement retailer. They sell a lot of stocks. So let's have a look at some of the things that they let's have a look at the financials. So net sales $37.5 billion. So this is for this year, this is for last year, and this is the change. Okay, so this year $37.5 billion, from last year $28.2 billion. Cost of the sales was 24.7, and then year before was 18. So you can see this is growing, but obviously the good thing is the gross profit is growing. Okay, and it actually has grown 32.4%, and that's really good. 32% from last year. That's excellent, absolutely amazing, right? Then we need to look at overall. There's a lot of things in here. Okay, so I'm going to skip those things, but go straight down to net earnings. Okay, so the net earnings is really important. Look at this. Last year was $2.2 billion. This year $4.1 billion. That's up $84.6 billion. That's huge. That is huge, absolutely huge, right? So this is just the earnings. So this, okay, next we're going to look at the balance sheet. So the balance sheet will give you where the company is making profit, how things are going, and so on. Okay, so it's really important. If they're going to run into some sort of problems, will the company be able to pay the debt? Will they be able to sustain themselves, or will they crash and completely go bankrupt? Okay, so that's the reasons we look at the balance sheet. So as you can see here, we've got total current assets. So this is for the next 12 months. So this is money that they can liquidate and use to pay off anything that happens in the next 12 months. Okay, so they've got $30.6 billion. That's growing from last year, which is really good to see. Then you've got the total assets, okay, 32.5 from 58. Again, that is really good. Let's now have a look at their liabilities. So total current liabilities. So this is stuff they might have to pay off in the next 12 months. Okay, that's completely covered, as well as the total liabilities. Okay, completely covered as well. Okay, their total liabilities, and that's completely covered as well. Now this is amazing. So far so good, right? Next thing we're going to look at is the cash flow section, and one of the things I want to bring your attention to is the net cash flow provided by operating income. So that's 6.3. And finally, the last thing I want to show you here is this: repayment of long-term debt, repurchases of common stocks, and basically dividends. Okay, so this one here, repayment of long-term debt, they paid off their long-term debt of $1.3 billion. They bought back some of their shares using $3.7 billion of their cash. And they paid you and me and everyone that owns this company $1.7 billion in dividends. Now, these three things are very important to me, and it should be important to you as well, because the company is paying their long-term debt. Okay, so we try to buy companies that have almost zero debt as if it's possible, right? The fact that they're buying back their shares, that means your own one share of this company is worth more whenever they buy back their shares. Okay, whenever they issue more shares, your one share is now worth less, right? So this is a very good thing to see. Then they pay you dividend, and their dividend is growing, and I'll show you towards the end. So really, really good. What I've seen so far is excellent. Very good quarter, very good year. Company still profitable. There's no issues. Everything seems perfect. Now, one of the things that people are saying at the moment is they're saying this here, okay, this what they've made this year, there's net sales will probably basically stop. But maybe it might just dip a little bit next year. So instead of 32%, it might be less than that. So the gross profit might drop. Why? Because a lot of people have stayed at home in the last year and a bit, and because of that, people are saying, you know, the people are renovating their houses, this and that. But I kind of disagree, because if you think about it, a lot of people, for example, in London, moved out of London to actually go to the suburbs to actually work from home. Now, work from home has become a thing, and I don't think it's going to go away anytime soon, which means people will be renovating their houses, buying more furniture and this and that. Okay, so I think this trend will continue. It might not be 32 next year, but it will still continue. I think it will definitely continue for then probably next couple of years. Right, so that is that side. Now we're going to look at if the company is a buy or sell or whatever according to Yahoo Finance. So according to Yahoo Finance, it's a buy at the moment. Okay. Now, one of the other thing I want to show you is when it comes to simply say Wall Street, it's 19% overvalued at the moment. And I can't agree with that. Okay. Because if you look at my portfolio, my average is 283. I wish I bought more, but that's my average at the moment, $283 per share. And as you can see, I put here price alert of 290. That means when the stock goes down to 290, I will get a message from Trading 212, and that's when I will be adding to my shares. Right now, I think this is too expensive. Okay, the fact that currently trading at $318, I think that's slightly overpriced. I think you might want to wait below 300 if you are planning to purchase this stock. Again, I'm not a financial advisor, so please be careful and check and obviously do your own research. Now, as you can see here, the analysts are predicting this stock to go up, $345 per share. Now, the final thing I want to show you is Home Depot has recently declared a dividend of $1.65. They also announced that they're going to purchase their own shares using $20 billion of their cash. So they're buying back shares. They are paying you really nice dividend. This is how much you get paid for every single share that you own. Okay, and top of that, they've actually increased their dividend recently. So around February time, they've increased it by 10%. So from $1.50 to $1.65 per share. Again, that's huge. So you've got a company that's growing, that crashed completely their latest earnings, very good balance sheet, very good dividend, okay, and is growing as well. Okay, and again, it might dip next year or so, but the most important thing for all of us as investors is that we stay course and we focus on the long term, and you just buy the stock, forget about it, put your price targets whatever you want it, okay, and then if it hits your price target, buy more. Again, if I was to pay $290 per share, that means I'm actually basically averaging it up instead of averaging it down. I wish I could average it down, but I don't think the price will go down below unless, there's a massive crash. I don't think it will go below that. And again, because of the FX impact, I'm actually up 11%, but because of this crazy FX impact, I'm actually losing about 6.6% of my total gains. Again, I'm not really worried about that because they pay me really good dividend. If I show you the dividend history, I can't remember last time when they actually paid dividend, but you can see, there we go, $6 per share. That's £6 per how many stocks do I own? So I think at the time I owned 6 shares that I got paid for $6 in total, £6 in total. Okay. Anyway, I just wanted to give you a quick overview of what I think were basically about the company and their latest earnings. I hope you enjoyed the video. If you have, I'm planning to do another one basically this week for Lowe's as well, which is their competitor, and it is very similar company and style. Again, I do like both of them. Some people say you shouldn't have both of them in the same or whatever, but I'm not interested in that. I know they're both great companies. This is a dividend king. They've been around for a long time, so I'm definitely going to do a video on this company maybe next week or maybe this weekend. Inshallah, we'll see how it goes. But if you enjoyed the video, please like, subscribe, let me know what you think. Okay, let me know if you own Home Depot or you're thinking about it. Again, you know, if you have one of those if you don't want to spend that much money in one go, so you don't want to pay, you know, $319 for one share, you can actually buy, if you're in the UK and you're using Trading 212, which is the app that I use, or Freetrade, you can buy fractional shares, and I put the link down on my description section. Have a look at that. You know, if you sign up, you get a free share. I'll get a free share. Happy days. Anyway, thank you very much. Assalamu Alaikum. Take care.